Assalamualaikum and hello everyone. My name is Mahsuri Binti Muhammed Rizal. Today I want to present about introduction to financial and costing system. As you guys can see, this is the table of contents for these slides. First, the definition of financial accounting. Financial accounting is the process of preparing financial statements that companies use to show their financial performance and position to people outside the company, including investors, creditors, suppliers, and customers. Next, definition of cost accounting. Cost accounting is a process of recording, analyzing, and reporting all of a company's costs for both variable and fixed that related to the production of a product. This is so that a company's management can make a better financial decision, introduce efficiencies, and budget accurately. Third, differences between financial accounting and cost accounting. Firstly, for financial accounting, it records the information which are in monetary terms. Meanwhile, for cost accounting, it records the information related to the material, labor, and overhead which are used in the production process. Next, for users of information provided by financial accounting are internal and external parties like creditors, shareholders, etc. While for cost accounting, users of information provided by cost accounting is used only by the internal management of the organization like employees, directors, managers, supervisors, and the rest. In addition, for financial accounting, financial statements are reported at the end of the accounting period, which is normally 1 year. Meanwhile, for cost accounting, the details provided by cost accounting are frequently prepared and reported to the management. And lastly, for financial accounting, profit analysis such as income, expenditure, and profit analyzed together for a particular period of the whole entity. Meanwhile, for cost accounting, profit analysis generally analyzed for a particular product, job, batch, or process. Next, we move to objective of financial and cost accounting. So, the objective of financial accounting is to keep a systematic records, compliance with statutory requirements to protect business properties, helps to manage measurements of profit and loss of business, and lastly, to provide information system. Okay, firstly, to keep a systematic records. Accounting is done to keep a systematic record of financial transaction. Next, one of the objectives of financial accounting is compliance with statutory requirements. It's ensure compliance with local law related to the Taxation, Companies Act, and other statutory requirements relevant to the country where the business undertakes. Besides, they protect business properties because accounting provides protection to business properties from unjustified and unwarranted use. In addition, financial accounting also helps in the measurement of profit and loss of business. It also exhibits the assets of liabilities of the business. Lastly, to provide information system because accounting function as an information system for collecting and communicating economic information about the business enterprise. Next, we have the objective of cost accounting. For the objective of cost accounting, we have the fixation of selling prices, the ascertainment of cost of product, measurement of efficiency, reporting to the management, and lastly, cost control procedure. Yes. Cost accounting helps to find out cost production and fixation of selling prices of the product or process, job, or operation. Besides, to ascertainment of cost of product. Cost accounting ascertains cost of production of each job, process, or work order by applying different methods of cost accounting, such as job costing, process operating costing, contract costing, and the rest, according to the suitability and needs of the organization. Next, one of the objectives of cost accounting is measurement of efficiency. Cost Cost accounting measures the efficiency of each product, process, or departments by applying standard cost method. Furthermore, reporting to the management is also the objective of cost accounting. Cost accounting reports to the management periodically, which may be monthly, quarterly, or half-yearly. And last but not least, cost control procedure. Cost accounting control costs by setting standards and compare with the actual. The deviation between them are identified and, if required, necessary controlling measures may be taken. Okay, next, external users and internal users of financial information. First, we have lenders. Lenders use the financial information to assess the ability to settle amount owed to them when due, such as loan and interest. Meanwhile, for investors, they use because they're concerned about risk and return of their investment, such as dividend. For governments, information to enable them to regulate the business activities, determine taxation policies and basis regarding national income and similar statistics. Meanwhile, for shareholders, to ascertaining the profitability and financial strength of the company. Next, for supplier, they use the financial information over short period or long term if the company is likely to be their permanent customers. For agencies, they use information about allocation of resources. For example, activities of the company. Next, for public, they use it as to assess contribution to local economy, such as employment and business opportunities for local suppliers. For creditors, they assess ability to settle the amount owed when due. Meanwhile, for trading partners, they decide to trade with the company. And lastly, for tax authorities, they use the financial information to tax authorities determine whether a business declared the correct amount of tax in its tax returns. Next, for internal users, finance managers. It enables the finance department to evaluate the ability of the organization or company to pay its business debts. For management, it is used as a guideline to plan, organize and control the organization and analyze the performance the business. Next, for marketing department, they use as a guideline to determine the policies and the price of the products to be market. And next, for employees, they use the ability to provide salary and other benefits like retirement benefits. Meanwhile, for employee unions, to ensure that them demands to the employees, such as salary increments and other benefits, are reasonable compared with the company's financial ability. And for owners, they provide fund or capital for the organization. They also possess curiosity in knowing whether the business is being conducted on sound lines or not, and whether the capital is being employed properly or not. And next, for the managers, they use financial information to allocate the financial, human and capital resources toward competing needs of the business through the budgeting process. Meanwhile, for the directors, they use to determine whether the organization is working towards its objective. And lastly, for the auditors, they use to determine their accuracy. That's all from me. Thank you, everyone.